It looks like attendee numbers have stabilized now, so we'll get started. So thank you everybody for joining us this afternoon for Transport Intelligence's Ocean and Air Freight Tracker Outlook webinar for Q2 2024, where we'll be taking a close look at everything going on in the ocean and air freight markets in relation to rates and supply and demand situation, and trying to give you as clear a view as possible as to what the outlook will be for the rest of this year, quarter by quarter, in both those transport markets. It's been a very interesting period, of course, in both air and ocean freight over the last few months, and we've seen a bit of a dip off in the period we're looking at in Q1 in this webinar for rates, but then a pickup over May and into June in both air and ocean freight rates as demand starts to pick up. So really, we're looking ahead to the rest of this year, looking at whether that's a matter of inventory restocking and a response to key crisis points, with the Red Sea still ongoing, for instance, and adjustments to that, or if this is a longer term uptick in demand and we're likely to see long-term rate increases as well, and at what level they may sit. So that's what we'll be exploring today. The session itself will last for about 30 minutes, and then we'll move on to a Q&A session. You have the option to ask any questions you like in the Q&A tool available through Teams as normal here. So please do ask those questions during the course of the session, and we'll answer as many as we can at the end of the session. Also, after the session, we'll be sharing a copy of the webinar recording and the reports on which this is based as well. So if you'd like to read about any of the issues discussed today in more detail, you can do via those reports. Now, let me please introduce you to myself and our panelists. So those of you who don't know me, I'm Michael Clover. I'm your host today. I'm TI's Head of Commercial Development, and I oversee the Logistics Trackers product from which these reports and this webinar is drawn. So if you want to understand more about what's going on in the air and ocean freight, and indeed actually in warehousing and in road transport, and how transport prices are changing, what's driving those, what are the dynamics, and what's the future outlook for pricing, then please do get in touch with us. We'll be very happy to discuss the data and the reports that we can provide on that. I'm also joined by Vicky Kekarovska, who is TI's freight team leader and oversees a lot of our research on air and ocean freight. So thank you, Vicky, for joining us.
Thank you, Michael, and hello, everyone.
And as well as Vicky, I'm also joined by Janan Hassan, who is one of TI's economic analysts and who manages a lot of the data updates and analysis for these reports as well. So welcome, Janan.
Thank you, Michael. Hello.
Okay, and now we'll move on, first of all, to look at ocean freight, and then that will be the first section of our presentation today. And then afterwards, we'll move across to look at air. Now, just note as well, in these instances, we'll be looking at the global market, although we will obviously pick up on certain things happening on certain lanes. But the full reports and indeed the trackers product does actually provide region by region and lane analysis as well for all the things you see today. But on this session, we're just looking at the global level to give you an overview. We're starting off looking at global ocean freight rate development with this index. And Vicky's going to take us through the overall rate development picture.
Yes, thanks, Michael. So you can see from this chart that there has been quite a significant jump in ocean freight rates in December. And of course, this was mainly driven by the Red Sea crisis. And we can assume that it was a reflection of both market uncertainty as well as the actual shortage of capacity due to the rerouting that had to take place. However, since the beginning of January, ocean freight rates have fallen considerably. And from around this period, alternative routes have become more stable, and ocean carriers have quickly adapted to the closure of the Suez Canal. And obviously, this has been supported by the plentiful supply of container vessels in the market. And then the other driver of freight rates is obviously the level of demand, which has been muted throughout the first quarter. And for instance, some events such as the Chinese Golden Week in January delivered comparatively low increases in freight demand. And around that same time, demand across Europe was quite low. So the combination of these two factors has led to a continued fall in ocean freight rates at a global level. However, the most recent data shows an uptick in ocean freight rates this quarter. And again, the Red Sea crisis continues to be the major driver of this uptick.
Yes, thanks, Vicky. So that's data through May and June, which isn't shown on this chart, but we see that demand picking up. And I think the next slide would take us on onto demand as well, and Vicky's going to take us through that as well.
Exactly, yeah. So we can talk about volumes here. You can see according to our volume index, the global volume index, overall volumes have been trending upwards since the start of 2023. In the first quarter of 2024, for instance, global volumes increased by around 8 index points. That's year on year. However, on a quarterly basis, global volumes saw a decline of around 1.5%, and this was mainly driven by a decrease in Asian ocean freight volumes. So when it comes to demand, obviously, US consumer spending and US demand is an important factor. And in this regard, even though the boom in consumer spending in the US, which was fueled by the savings surpluses and government subsidies, appears to have come to an end, the US economy still seems to be growing sustainably. And then we also have interest rates, which are falling in a number of Western economies. And this is also supporting consumer demand, although evidence is a little bit mixed. And on top of that, there is some speculation that retailers are rebuilding their inventories, again, boosting ocean freight volumes.
So just a little bit of uncertainty about how sustained that increase in demand that we're seeing at the moment, and that is actually putting pressure on capacity will be, and whether we're looking at a new sort of higher demand scenario, whether we might return to something a bit more muted in a month or two. But it's very interesting, obviously, when looking at that supply and demand mix, and obviously we'll turn now, having looked at volumes and demand development, really to look at capacity as well here, and looking at overall capacity index here. And Janan's going to take us through this one.
Thank you. So compared to the same quarter last year, capacity increased by 1.5%. However, quarter on quarter, global average declined by 0.7%. Our latest figures show that month on month from March to April, capacity actually increased slightly by 1.6%. And maximum capacity was recorded in June of 2022. However, since then it's declined by 10.2%. The short to medium term effect capacity will have on rates largely depends on the return of normal activity to the Suez Canal. And overall, future overcapacity could put downward pressure on rates in the long term.
Yes, thanks, Janan. So very interesting picture in capacity, obviously, at the moment with the management of that, and obviously very difficult to put precise figures around it as ship speed times are being adjusted and different vessels brought back online as well. So it's a very uncertain picture for capacity too in the future. And I think we'll be coming on a bit later as well, talk a bit about how we see the sort of new routing and management of that playing out as well for the forecast period. But we'll move now to another supply side factor, which is really looking at fuel in this case, and how those prices are affecting the overall cost base of ocean freight, and obviously how that feeds into prices. And again, Janan's going to talk us through this.
So with fuel, bunker fuel prices followed a similar trend across all regions, with an average global increase of 4.4%. Asia Pacific particularly saw the highest month-on-month increase at 6.9% after decreasing 7% last quarter. On a quarterly basis, global prices increased by 6% and year-on-year. The increase is more pronounced at 13%. Overall, the prices have increased, but they remained within the range of previous data. And looking forward, it seems like the market remains less reactive to geopolitical developments, and that's largely due to OPEC's large spare production capacity.
Yeah, it's actually remarkable given all of the disruption that we've seen, especially in the Middle East over the last few months, how stable fuel prices have remained. Obviously could have been a very different story, but that's why we have the data to show us, really. All right, and we'll move on then now to thinking a bit more about what's going to be happening over the next few months in the ocean freight market. And the first thing we'll look at here is TI's Ocean Freight Sentiment Index, which basically measures what you, the industry itself, are thinking about how rates will develop. And we actually do this for air and ocean freight. And Vicky, can I ask you just to explain how the sentiment index works and obviously what it shows this time around?
Yeah, so the index is based on the poll we run with industry stakeholders, and where we ask participants to share their thoughts about ocean freight rates on various trade lanes for the upcoming quarter. And the latest poll results show that with regards to the Asia to Europe trade lane, that the majority of respondents believe that rates will increase. And the responses were split between a significant increase and a moderate increase. Whereas last quarter, the majority believed that rates will increase significantly. Probably this was due to the onset of the Red Sea crisis. So overall, the consensus is that rates in the coming quarter on this trade lane will increase, but the increase will not be as intense as last quarter. And then on the two other lanes, Asia to North America and Europe to the US East Coast, the majority of respondents believe that rates will increase slightly. So overall, on a global level, rates are expected to increase slightly according to the majority of poll participants, whereas last quarter they were expected to increase only moderately.
Thanks, Vicky. Yeah, so there's definitely a strongish view there on rate increases for the upcoming quarter. And that's one part of our coverage of ocean freight rate development. But alongside that, we also have our rate outlooks. And this is the global one that I'm showing now. But we also provide this for Asia to Europe, Trans-Pacific, Transatlantic through our trackers product as well. But this brings them all together to look at the overall picture. And just a few notes on how to interpret this. Basically, the line at the bottom here shows the overall direction of rates that we expect over the upcoming quarters. That factors everything in all together. But then in the individual sections above, you see all the different metrics that we track that feed into our expectations for rates. And it's just important to note that the arrows there show the directional effect that those different factors will have on rate development, rather than necessarily that the line showing operating costs going up means that operating costs are going up, although they are. But that's just important about how you actually interpret this. And as you can see, our expectation really for Q2 has been that rates will increase quite strongly. We have the darker arrow there showing the more strong increase. And then we predicting increases, but slightly less significant for Q3 and Q4 before the market sort of stabilizes again towards the end of the year. That's our overall expectations. But Vicky and Jinan are going to help me explain why that is. And firstly, we'll take a look at some of those demand side factors and what's influencing that over the forecast period. And Vicky's just going to pick out a couple of key points on the demand outlook for us.
Yes, well, in terms of demand, consumer spending will continue to put upward pressure on rates. However, it's not expected to provide any demand shocks in the short term because, yes, consumers are buying more, but it's not clear that they are spending enough to shift the freight markets. And the increase in US imports we've recently seen in the past couple of months, for instance, doesn't necessarily mean that the US retail economy is shifting to a higher gear. It might actually mean, as in previous years, that retailers are advancing, so they're pulling some goods forward to avoid peak season risk and higher peak season rates. Then in terms of industrial demand, our expectation is that industrial investment will slow down. And then inventories, another very important factor. We anticipate that rates will probably go up, and this will be driven by some inventory restocking, especially because the inventories were significantly reduced last year. And it seems like there is some degree of restocking going on at the moment because businesses and retailers were quite cautious last year, especially in Europe, because maybe because the macro environment would not be so good. So they were cautious to order too many goods. However, it seems like businesses have now run their stock down, and consumption keeps on doing better than previously expected. So there is a little bit of restocking going on, which pushes rates up.
Thank you. Thank you, Vicky, for explaining that. And Janan, would you just help us understand a bit about the supply side outlook as well?
Sure. Following up on what Vicky said, there's been an uptick in demand after a sluggish start to the year, and that's led to a shortage of containers and capacity. Containers have divergence to the Cape Route to remove another 7% of total capacity. And despite a record increase in nominal capacity from new deliveries, the effective demand currently exceeds. And a recent report by DHL is saying that the container shortages have worsened in many Asian locations, with all new boxes fully booked until August. So the capacity shortage could last through the usual peak season until October. In terms of bunker prices, the oil basket price in general is showing resilience despite geopolitical uncertainty, but the rises we saw in April are largely attributed to the tensions in the Middle East. Currently, prices are trending higher, but even though the prices remain high, the extended period of US interest rates being high has raised concerns about future demand growth, as higher borrowing costs can slow economic growth and reduce demand overall in the long term for oil.
Yes, thanks for the answer. It's very interesting, and it's a really interesting capacity situation at the moment with all the congestion and disruption and the changes that have had to be made to accommodate rerouting around the Red Sea, leading to that kind of constrained capacity environment, as you say, even with new ships coming online at record rates, really. So very interesting situation in ocean freight. And it'll be interesting to see how it plays out, of course, as the year moves ahead. But now we're going to turn our attention away from ocean, and we're going to look at the air freight situation, which is also very interesting at the moment. And first of all, just like with ocean, we're going to look at the overall rate development in air freight. And Vicky's going to explain what we've seen up to now.
Yeah, so we've got a similar picture to sea freight here. And that's that global air freight rates increased significantly in the last quarter of 2023, but then fell again in Q1 this year once peak pressure was relieved. For instance, average Q1 2024 head haul rates fell around 11 points compared to the previous quarter, whereas backhaul rates remained relatively stable throughout the same period. And then similarly, year-on-year rates on the headhaul index were down around 36 points, and backhaul rates were down around 25 points year-on-year. And as I already mentioned, this was mainly driven by muted demand in the first quarter. I mentioned Chinese Golden Week, which didn't provide much support to air freight demand, and also a very low muted growth coming from Europe. However, it seems that the demand picture has changed recently over the past few months, and indeed this is pushing air freight rates up again.
Thank you, Vicky. And if we look now more specifically at volumes, we can see quite a sharp increase there at the end of the chart. But could you just tell us a bit about what's been going on in terms of volumes, Vicky?
Yeah, so our index shows that the global volumes for the air freight market decreased in Q4 by around 6%. However, despite the month-on-month declines we've seen in the first 2 months of this year, there has been a strong recovery in volumes in March, with global volumes increasing by around 17% month-on-month, which is quite significant. And then also year-on-year, air freight volumes have increased by around 7%, primarily driven by European volumes, but also Asian volumes and North American airport volumes also saw an increase. And as we already mentioned, one of the most prominent forces currently affecting air freight demand is the Red Sea crisis, especially on air freight demand between Asia and Europe. And this crisis has increased demand for air and sea services from Dubai, India, and Singapore to such levels that some reports suggest that the airport facilities are severely congested in these locations. And then another remarkable demand driver is the emergence of the Chinese e-retailer. So significant volumes coming from there into the US in particular, but globally as well, which are significantly boosting air freight volumes on the Trans-Pacific lane in particular.
Okay, thank you, Vicky. And then just turning to capacity, really interesting overall situation in capacity with it seems on new capacity arriving somewhat sort of outpacing demand as more and more belly freight comes online, but whether that's being utilized is not necessarily that clear. But Janan hopefully will be able to explain a bit more about the overall air freight capacity situation for us.
So, according to IATA, global air cargo demand grew for the fourth consecutive month, with a 10.3% year-on-year increase in cargo ton kilometers or CTKs. And this is the first time Q1 traffic has exceeded record levels we observed in Q1 2021. International CTKs increased by 11.4% year-on-year, and that growth was mainly driven by carriers from the Middle East, Africa, and Asia. ACTKs, which are available cargo ton kilometers, also rose by 7.3%, and that's largely due to international passenger demand and increasing belly hold capacity, as Michael said.
Great. Okay, thank you, Janan. And then if we move on also to fuel, of course, a very important factor in aviation.
So quarter on quarter, the world average jet fuel prices decreased by 4.2%. And all regions saw similar trends, but North America experienced the largest decrease of 4.9%. Month on month, the prices also decreased 8% in North America and 7% globally. Jet fuel costs are roughly a third of all airline expenses, and they do remain high despite these recent falls. Not to mention the global push for the aviation industry to decarbonize and increasing competition to obtain sustainable aviation fuel. The oil basket price, although it's not rising as dramatically due to geopolitical tensions, is still rising, steadily due to a rebound in demand. And kerosene, which is jet fuel, demand is driving the increase according to OPEC. IATA has also forecasted that the total passenger numbers on airlines is set to hit a record high this year at 4.9 billion.
So that demand for fuel, obviously not just from freighters, but also from the passenger side, quite strong then. Okay, well let's move on to the sentiment index then, and this similarly to what we have for ocean freight, but for air. And Vicky's just going to explain the trend here as well.
Yeah, so this quarter, the general sentiment for air freight rates on the Asia to Europe lane was that rates were going to increase moderately over the third quarter. So that suggests an increased optimism among industry stakeholders, because in the previous quarter, there was a consensus among the majority of participants that rates were going to increase only slightly. Then on the Asia to North America route, sentiment remains identical, and the majority of respondents expect rates to increase either moderately or slightly, but again, clear expectations of rate increases. And then on the Europe to US East Coast, the sentiment has shifted from no change to an expected slight increase in rates in the upcoming quarter. So globally, the sentiment has shifted from a slight increase to a moderate increase in the upcoming quarter. So that reflects an increased optimism in the industry, and we can assume that this is probably based on assumption that the Red Sea crisis will probably persist and continue to have a knock-on effect on air freight, or they might be optimistic that the demand picture will continue to improve moving forward.
Yeah, so that sort of demand picking up, the sort of effects we're seeing of those e-commerce volumes, and obviously that modal shift as well to deal with the Red Sea, all coming together to make, I think, a bit more confidence in air freight in terms of rates, as we can see in that sentiment index. So let's see how that compares to our outlook grid for air freight as well. So this works much the same as our ocean freight outlook grid. So, we show overall effect at the bottom here. And then the sort of effect of these individual factors in the lines above as well. But you can see that we're, expectations for Q2 overall were rate increases, but they were expecting a more stable picture in Q3 before a bit of an uptick again towards peak season, or peak consumer season really in Q4, and then a sort of flatter situation out into next year as we expect the sort of demand situation to stabilize somewhat. So that's the overall picture in air freight, but there's lots of complexity really, obviously on both the supply and the demand side for air freight, and Vicky and Janan are going to help shed some more light on that. But first will be Vicky looking at some key points on the demand side for us.
Yeah, so we believe that the growth in air freight volumes that we've seen towards the end of Q1 will probably continue into the Q2, pushing rates up. Rates could normalize from the end of the second quarter and possibly remain flat quarter on quarter in Q3 before picking up again in Q4. And then a significant contributing factor to the increased air cargo rates in Q2 will be the shortage of capacity, as the big Chinese e-commerce marketplaces buy up as much space as they can find to serve strong US demand. So these strong EU e-commerce volumes could tighten capacity and create potential surges in demand later in the year, and will continue to boost volumes and in turn air freight rates. And there is an expectation that the volumes out of Asia over the summer will compensate for much of the incoming capacity. So overall, yeah, demand conditions are very complex, difficult to understand, and it also means that one or more of the demand factors could change rapidly, and thus affect the level of rate growth quite quickly.
Yes. And obviously, with air freight being that sort of quick solution to transport problems overall, it generally seems that when there's disruption, people tend to move to air freight as much as they can away from ocean if that's necessary. So we tend to see it being a bit more volatile from that point of view anyway. But okay, thanks, Vicky. So Janan, would you just like to highlight a couple of points on the supply side for us as well?
Of course. So available capacity growth has outpaced utilized capacity growth for 24 months until March, but now they're converging. So reducing downward pressure on rates due to surplus capacity on that front. As the wave of belly freight hitting the market slows and the demand for freighters remains strong, the supply side may be tightening, which could become more serious in the medium to long term due to a shortage of new aircraft deliveries. And on the fuel front, it's likely that airlines will try to control costs for consumers, but they can't absorb all these costs indefinitely. So we expect rising jet fuel costs to have an upward pressure on rates in the short to medium term.
Yeah, so that tight constrained capacity situation. I mean, it'd be interesting to see the effect that may be had when the express and parcels volumes, as expected, pick up as well, and some of the big international express companies start utilizing their fleets for parcels again as well. What effect that might have on the overall capacity situation, but we'll have to wait and see on that one. Okay, well, that brings us to the end of our presentation period today. So thank you very much, Janan and Vicky, for sharing your insights on the development of the ocean and air freight markets and our expectations for the time ahead. We'll now move on to our Q&A session. So please do feel free to enter your questions into the Q&A tool on Teams to ask anything that's cropped up for you during the course of the presentation today, and we'll do our best to answer those questions. We'll turn to our first question, which is actually picking up on some of those questions around e-commerce demand driving air freight then. So maybe this one for you, Vicky. Will strong e-commerce demand push up air freight rates for the rest of the year?
Yes, that's a good question, because as we already talked about this, we've seen really strong e-commerce volumes this quarter. And in general, e-commerce volumes have been very important for the air cargo sector. They have been supporting air freight volumes over the past few years, and we know that airlines have been expanding their operational services, in particular on the Trans-Pacific trade lanes, but also some of the ocean carriers with air cargo operations. They have also expanded on this trade lane, with some examples such as CMA CGM, but Maersk and MSC also expanding their Trans-Pacific air cargo divisions. And as I said, this strong e-commerce demand is being pushed by the Chinese online marketplaces and the e-retailers. So they benefit quite a lot from the US generous de minimis threshold of $800, under which goods are exempt from taxes and customs duties. However, it seems like there is a real threat now that some laws and regulations and possibly tariffs could be introduced by the US lawmakers, which could undermine the growth of these sectors. And it might be the case that they introduce these legal barriers for Chinese companies exporting to the US, because a lot of the industry bodies believe that this minimum threshold level should not apply to textile. And also the European Commission too is reviewing the underlying business of these marketplaces and e-retailers such as Temu and Shein. So yes, in view of this, and if these tariffs are introduced, it might mean that the e-commerce sector will not provide that boost for the air cargo sector. So that will not last forever, and it will definitely impact air freight volumes on this trade lane, China to the US.
Yeah, really interesting. So this is a sort of trend which at the moment is a bit of a boom for air freight, but actually could be sort of taken away sort of fairly quickly with a few political decisions, and the business model of using air freight may just no longer be viable if there's changes in those de minimis rates, for instance. So that's really interesting.
It might actually, sorry to interrupt you, it might actually be the case that this surge in air freight volumes that we've seen from China to US are partially also driven by this threat of tariffs. It might be the case that retailers are ordering these goods now in order to avoid potential tariffs in the future.
Right. Yeah, interesting. So sort of stocking up in order that at least they can keep trading like that for longer after those things might come into effect. Yeah. Interesting. Okay, and we'll move maybe to our next question. So, Janan, I think this would be one for you, but obviously we've seen lots of disruption in ocean freight trade with the Red Sea crisis, and to a lesser extent, but not unimportantly, with the Panama Canal as well. So, how has container shipping adapted to those changes, and are there any other potential shifts that could affect the supply and demand balance in the future?
So the situation currently is complex on both supply and demand side. So the shipping sector is balancing a sharp increase in capacity requirements due to all the reconfiguration and large influx of new vessels, and the unpredictability and importance of road configuration are now significant market sources and will remain so in future. The issues in the Red Sea, Suez Canal, Indian Ocean, and possibly the Mediterranean have changed container shipping demand, and the rerouting around the Cape of Good Hope has increased demand 10 to 15%. And these longer routes add more complexity. The continuous flow of new ships from Chinese and South Korean shipyards has moderated this market impact. And the potential return of the Suez Canal route could shift the balance to an oversupply of container shipping capacity. So we will just have to wait and see how things unfold on the Suez Canal.
Yeah, I suppose it really depends how long that persists for, really. But can't necessarily set expectations for when that might end. Just have to carry on with the current situation. Vicky, do you have any view on to the sort of duration of that and the long-term effects?
So yeah, we know that up until now, yes, the crisis in the Red Sea has had a huge impact on rates, but there are some possibilities now that the crisis could end soon, because we all know there are attempts to agree a ceasefire between Israel and Hamas, and there is a strong possibility that violence could end in the next few weeks, and this will obviously have a huge impact on shipping in the Red Sea. And if this happens, we can assume that the container shipping lines will perceive it as safe to resume passing through the Red Sea and the Suez Canal in the near future, and this will have a significant impact on rates because obviously it will result in a wave of new shipping capacity hitting the market, which will push rates down, and this will be a very sudden and violent drop in rates. But in general, I think I guess no matter how long the Red Sea disruption lasts, the fundamentals of overcapacity, of increasing overcapacity in the market will probably eventually prevail and could start hitting the market as early as the third quarter of this year.
Very interesting. Okay, some other questions we've had. Just a quick one I'll deal with quickly. Will we share the slides afterwards? Yes, you'll be given the presentation afterwards, and also links to download the reports it's all based on, so don't worry about that. Another question here then asking, do we believe the underlying demand is there to keep ocean rates inflated for the remainder of 24, or is this an early short-term peak? Well, Vic, I think that maybe ties into some of the things you've been saying about the restocking and how long it will last. But do you have any comments on whether this is really just an early short-term peak or more long-term?
I believe so. I think that the retailers and businesses are just bringing their goods forward in order to avoid peak season disruptions and higher peak season rates. And as we said today, yes, U.S. demand is growing, but it's not growing in high digit numbers, and it won't provide any huge demand shocks.
Okay, thank you. Another question here as well. So given that sentiments that air and ocean rates are expected to increase, I think referring to the sentiment trackers there, how are folks approaching rates in their contracts with freight forward carriers? Are they looking at static rates, referencing index, longer for aiming for longer term contracts? So that's some quite a questions that we asked about in our freight procurement surveys, really, aren't they, Vicky? So I don't know if there's any insights from that you'd like to sort of try and share.
Well,
sort of behavior there.
It's difficult to say. I would say that possibly shippers might be willing to enter into longer term contracts for air freight because that market seems to be more stable, I would say. But the ocean freight market is still quite volatile. I mean, we've seen the general rate increases that were introduced in May and June that were quite significant. So I guess they would probably hold off on signing long-term contracts until this Red Sea crisis and disruption has resolved.
Yes, thanks, Vicky. Okay, and then another question here on sort of capacity, which maybe you can have a look at, Jinan, but it's asking if we have any sort of estimates on the capacity used by Chinese e-commerce players at the moment. Jinan, do you have a view on that?
The data I've got for Asia Pacific is not very granular, so I don't have a complete view of which capacity is being used by the Chinese e-commerce giants.
Sure. Yeah, absolutely. So we're sort of left with anecdotal evidence there that that they're basically booking all their freight by air. That's their business model to bring goods in quickly. I don't know if you've got any sort of anecdotal comments you can offer on that, Vicky, at all.
No, but I agree. That's what they primarily use air freight, unlike other marketplaces such as Amazon or Alibaba that have warehouses across Europe, and they get their goods moved through sea. So the model is quite different from these marketplaces.
Yeah. Brilliant. All right. Well, thank you very much for answering those questions, Vicky and Jinan, and thank you very much, everybody, for joining us today for our Air and Ocean Freight Tracker webinar. Obviously, we'd be very happy to continue this discussion in more detail with any of you if you're interested in learning more about the data or freight purchasing behaviors and strategies. So please do feel free to get in touch with us to carry on the conversation. We'll be happy to hear from you. Otherwise, thanks very much for joining us once again. We're pleased to be able to present our research to you, and we hope to see you again on the next webinar. So thank you to the panelists, and thank you for joining us.